All right, let's go ahead and talk about Bitcoin and more of the markets in general because as we talked about in yesterday's video, things were looking really good. We were shaping up nicely with this bullish hammer candle above this daily EMA, and it was structurally looking really good. We had swept most of the liquidity throughout this range. If we go over to our liquidation heat maps, you can see we had swept most of it from yesterday. If we go ahead and refresh this once more, you can see we have it now gone ahead and grabbed more of this liquidity, and this was built up from the lows not getting fully swept, which is something I had kind of warned about because we had this was your main sweep level, this like yellow dashed line. If we go over here to the 30-minute time frame, you can see yesterday when we came down here to this level, we front ran it. We didn't actually grab the liquidity with these sweep levels. You kind of want to pierce through them, grab the liquidity, and then resume higher, but we did have this deviation below this other one, so I thought this could have been the play and price would have just resumed there, and that would have become the low. But of course, you can never predict the charts, and one of the big reasons you can never predict the charts is because you can always have unforeseen economic data, and that is the reason we're seeing the dump here on Bitcoin and why I think a lot of market participants are very worried right now. So let's go ahead and talk about that, starting off with the economic calendar. What is the data that came out today? And that is going to be the unemployment rate came in hot, 4.3% versus the expected 4.1%, which doesn't sound like a lot of percentage points, but just based on how the chart had already shaped up, we are starting to uptrend steeper on the unemployment. So with this new data, we have started crossing EMA's moving averages that do start to signal the recession is starting, such as the Somero indicator. And with this data, CME is now predicting that the Fed is going to cut 50 basis points in September, not just 25 basis points. I know a lot of people think that rate cuts are bullish. No, they are cutting because something in the economy is broken and they're needing to stimulate it. So the more they cut, the more the economy is broken, the more bearish that actually is. And with all of this recessionary data, the Treasury yields have been reacting, and we do see our inverted yield curve coming up to cross the zero line. This is another historic recessionary indicator. Every time it dips below, it signals a recession is coming in the future. Every time it actually gets back uninverted, back over that zero line, is when the recession starts, such as 2007 and 2000. So this time I expect to be no different, but we're not quite uninverted yet, right? I don't think we have to worry right away. I still believe my base case is intact, that we're going to have this euphoria in the markets before the Fed does cut rates, because I think retail is still suspecting it's going to be bullish. And while yes, we're having a lot of big money sell off on this immediate news, we're also seeing a lot of retail, or even big money as well, shorting this, and shorts and puts at the lows on bad news usually get squeezed to the upside. The common practice in markets is to buy the bad news, to buy the capitulation, and then to sell the good news, which would quote unquote be when we actually get the rate cuts. So I do believe we're going to continue up here into, September, possibly beyond election season at the latest. But this just goes along with my case of I think we're in distribution for Bitcoin right now. I don't think we're in Wyckoff accumulation. And I do believe, assuming we can get up here, assuming we can break those all-time highs, this is where we grab that liquidity and roll back over into the range with that swing failure pattern or deviation to the upside, marking the final top for Bitcoin. But let's talk about the immediate price action, because we are seeing some interesting stuff here on the charts. If we go over to the 1 hour time frame, Bitcoin has swung below the sweep level here, so we have grabbed that liquidity and we got a nice wick out of this zone. There's not really much support within here volume wise. There is a big imbalance level in here, so we're finding support in the imbalances, which is a good sign that this will turn into a swing failure pattern, a deviation. Let's see if price can get back above and resume trend up. And I do see the case now where this really does become your low, and price is to immediately start hunting up for those higher levels. But assuming we do start heading up higher, we got to watch this economic data because it has flipped bearish, signaling recessions. We have unemployment claims coming out on August 8th, so that's in only 6 days. This will kind of give us the predictions for the unemployment rate, right? Claims usually come first, and then we have unemployment, such as yesterday we had the unemployment claims, which came in hot. That could have signaled unemployment rate was going to go up, and that's probably why there was a big sell-off yesterday as well. So we'll wait to see what these numbers come in as. If they come in hot, right, they're already moving up their predictions, saying that we're going to get 245K versus their previous forecasts were lower. So if we can beat their expectations, get under this on unemployment claims, then I do think that all-time highs for Bitcoin is going to be looking real plausible. If we come in hot once again, if unemployment continues to break people's expectations in a bad way, then we do got to be cautious that an all-time high on Bitcoin is something that's not a guarantee. And where would I look for a retrace? Well, I would go off a liquidity basis for that once again, and we have these poor highs throughout here, so I would expect, at least a minimum retrace on Bitcoin to around $68,000. I think this is coming in around that 786 on our fibs as well. So this is kind of my first big level to be watching for. We got some volume, we got that liquidity. That's in my opinion kind of your worst case scenario. But as I stated at the beginning of this video, I think it makes sense to grab all-time highs, right? So probably going to see Bitcoin come up here. And then there's also this scenario which Bitcoin decorrelates from the stock market. And what would it correlate to if it did decorrelate from the stock market? Well, that would be gold as a risk-off asset. So if Bitcoin is to truly play out what it was designed for, which was a safe haven asset after the 2008 great financial crisis to protect assets outside of banks, if we continue to see the dollar plummet, which is something else to note, right? With this capitulation in the stock market, money is not really flowing into the dollar. People are getting out of the dollar as well, which is not something you normally see on big market sell-offs. Normally you would see money going into the dollar is a safe haven asset, but people are not trusting the dollar right now. So there's that case where the dollar continues down, gold continues up, right? Gold's still at an all-time high right now, and Bitcoin decorrelates from the stock market and starts to follow gold, and that's where you could get a super cycle scenario even during a recessionary time. But that is highly speculative. I would not bet on that. Historically, Bitcoin has performed as a risk-on asset in the tech sector, especially with all of your altcoins. It would be real weird to see Bitcoin skyrocketing because you would normally see altcoins start following Bitcoin. The entire asset class of crypto, in my opinion, is going to be very sketchy during recessionary times if people are de-risking in the dollar because all of your exchanges and most of your ways to pay for crypto is swapping it from dollars to a stable coin. And if we have fears of recession, there's going to be a lot of fears around USDT, even USDC. We've already seen these stablecoins depeg. So highly speculative to believe that Bitcoin will decorrelate from the stock market, and that is why I'm certainly not betting on it. I do believe Bitcoin is going to continue to act as a risk-on asset for the foreseeable future. But does that mean that I am de-risking now? And as I stated earlier, no, it's not time to sell at the lows, in my opinion. I think worst case scenario, we're still going up to do a retracement and more probably going to still go to all-time highs before we do finally roll over into that recession. But let's go ahead and jump into some of these other charts. How are the S&P and Russell reacting with this economic news? And as you can see, the S&P has definitely dumped today, but it has created another futures gap to the upside. Our last futures gap acted as resistance, so let's see if this acts the same way, right? If we get a retrace and then just continue the downtrend, not the best sign in the world, right? We don't want that to happen. Let's see if we can actually get through this convincingly, maybe flip it into support and continue on up to hunt this CME gap at the top side. And I do think there's a good probability that this could, break all-time highs again, but might just be more of a double top, right? This is something that if there's a lot of shorts in the market right now that have put their invalidation here, could definitely be probable, right? Just come up here, make some sort of double top to swing fail it, and then that's when you actually enter the recession or depression. We've been talking about how this blow off top has started to roll over, so this is something that we've been cautious of, and we are continuing to see that play out, so let's stay vigilant. But I do think immediately right now, not the time to worry. We're going to have retracements. Worst case scenario, going to reject that gap. Then let's talk about the Russell, because the Russell has broken down as well, and it has actually broken away from the previous bull market range. This is the range we wanted it to hold right within here. And clearly after swing failing the highs, we have gotten all the way back below into the value area high of our bear market and this consolidation range right here. So the value area high, as long as we can hold that, that's not the end of the world, especially if we can, just reclaim this range. This could be more of a deviation to the downside now. We never actually tested this value area high when we rocketed up originally, right? We kind of just squeezed up through this, never back tested it. So let's see if we can hold the value area high here. If we are to accept back within this range, that's again just going to continue to look pretty bad for the Russell, and crypto has been correlating with the Russell, so this is something we got to be careful about. So this is something we got to be watching closely, but so far support is support until it's flipped into resistance. So we're at support right now. You would expect minimum, retrace the value area low, but very easily get up here into these inefficiencies, get back within this range. But we'll see how the Russell does play out here. Again, it's going to take some time for the market to decide what it wants to do. We got to wait for some more economic numbers, such as those unemployment claims for August 8th. And then so you can visualize what these unemployments look like on the chart. This is the unemployment rate chart right here, and you can see we have been winding up and we started to launch outside of the lows here with this new data, getting above that monthly 50 EMA. This is historically a pretty bad sign, 2008 and 2001. This is, of course, the dot-com bubble and great financial crisis, and then you see black swan events like COVID. Yeah, that sent unemployment skyrocketing as well. So this structure, not good to see, but if we start getting unemployment to come down, at least in the near-term future, we could have a short-term rejection of this EMA before the actual recession does start. So this is kind of my base case right now, right? Let's have a rejection initially, right? Squeeze all of these shorts, and then the real recession starts later on this year. So those are my thoughts on the market right now, and that is the reason we had this dump on Bitcoin. Our levels remain the same, right? We can add an extra resistance level right up here at these inefficiencies, but we still have this CME gap that was always considered to be a bullish correction if we had gotten down there. That could have been expected just due to TA. So yeah, still not out of the question. We can come down here, get into the golden pocket. Still wouldn't be the worst sign in the world before the final rally into all-time highs, which is still my base case. But if you do have any questions about anything I talked about, or just want to join the community for this channel, link to my Discord is in the description down below. Also, VIP Discord below that. Click on it to read more about it. 50% off right now for the first month with code EAGLE. And then below that are exchange links. We got a new event going on right now for BingX if you want to check that out, as well as a new exchange, Weeks, which is non-KYC. So if you guys are having trouble getting onto BingX, your accounts are getting flagged on other exchanges, Weeks should allow you to trade without KYC. I'm not sure if you need a VPN or not, but I don't think you do actually. So that's a new partner I have. They've been around since 2018, so they've survived a bear market. I think they're trusted, but of course, not your keys, not your crypto. And with that being said, thank you all so much for watching, and I'll see you all in the next video.